Well, howdy, folks. We're in our new house. It's an Airbnb actually, which is temporary until we find a flat that we're looking for. So it's kind of all a little bit sort of mixed up. But I've got my big screen there, and I've got my laptops and everything, Wi-Fi, speaker, everything's ready to go. So we'll have a look at the charts a little bit later on. I want to talk about where we are on stocks, particularly things like Nvidia, Apple, Microsoft, AMD. We were caught short on some of those yesterday. We're not out of them yet, but we probably will be at the start of the market today. It's going to be interesting to see where NASDAQ and S&P go. As we're going in towards Friday, today's Thursday, tomorrow is OPEX, and there are trillions of dollars on the line with options expiry tomorrow. So who knows what's going to happen in these markets. We've got jobless claims a little bit later on this afternoon. Let's see what happens. We don't know what the number will be, or even if we did know what the number is, we don't know what effect that'll have on the market either. Then we're going to have a look at natural gas and a couple of other commodities that we're in, like sugar, WTI, crude oil, etc. We'll have a look at some of those. We did take a trade on Bitcoin yesterday, which we got out of for some profit. Bitcoin's rallied back up again. We'll have a quick look at that. And then, of course, we'll look at the currency majors and the cross pairs against the yen. The majors we've been short on. We've done well on the majors, going short. And the yen crosses have just rallied up a little bit. But is there a sign that the yen crosses are turning now? We're talking about euro yen, pound yen, CAD yen, Australian dollar yen. All of those look like they may have reached a topping point. And we're short some of those as well. We'll have a look at those. So let's go straight into the charts. And if you're new to this channel and if you'd like to get updates where they come out, consider subscribing to the channel. And please give the video a thumbs up as well if you've enjoyed it. Well, hi folks. I think these videos have been very short over the last couple of days, but I have been moving and I'm still in the middle of moving house. And as you saw, I live in a very tiny little place. It's an Airbnb. It's not that small, but it's pretty small. And my working area is like a hobbit's house. If you know anything about the Hobbit and Bilbo Baggins in his little hobbit house, that's what this feels like. But it's fine. I'm quite enjoying it, actually. Let's have a look at the charts here quickly. So we've got euro, pound, euro CAD, pound CAD. In my last video, I said I'd be going short on these, and I was short on them. We've been short for quite a while, and we're now still short the euro. We've exited some of these for a profit, but have a look at where we are on the euro and the pound. They're heading down, and there doesn't seem to be any support below the euro until we get down to about 1.05. It's quite a long way down. We might have a little bit of support here, just below the 100-period moving average, which we're breaking at the moment. We've got this green line, and if we can get through there as well, then there's a little bit of support perhaps at 1.0730, but below that, not much until we get to the 38% Fibonacci retracement and this red horizontal support line at 1.0520-ish. So that looks like where we're heading on the euro. I don't know. We've got all sorts of things affecting the market, but overall the dollar is gaining strength. So there's every chance that the euro and the pound and the rest will pick up some weakness along the way. Here's the pound. Definitely a topping pattern there against that sort of previous resistance going back a long time. And also having broken up above this key resistance level here, we're now just breaking back beneath it. So that's a classic breakout and a pullback. If you looked at that on a 5-minute chart, you would see it as an over-under type of move. We can get down through there today, and hopefully it will be today, or at least this week. We've got the jobs coming out later, as I alluded to earlier. Then we can get down to this trend line. That would take us down to 1.2250. And if we can get below there, down to about 1.2180, that's this horizontal green line. But in actual fact, like the euro, the pound's heading back to its 38% fib, and that's all the way down at 1.18. I don't see any reason for the pound or the euro to be strong against the US dollar, considering the numbers that we're seeing coming out of the UK and considering the interest rate differentials and all sorts of data that's coming out in terms of jobs and sales and GDP. There's no reason for the euro and the pound to be as strong as they are at the moment against the dollar. And we've also got a major war right on the doorstep of those two areas. So I think that's what we're seeing, euro and the pound heading lower. We've got some strength in the CAD overall. Generally, some pretty good numbers coming out of the Canadian system compared to other countries. And also quite a high interest rate on the CAD, on the Canadian, I don't know what it's called actually, Reserve Bank, whatever it's called. But, you know, some strength in the CAD. And generally we're seeing CAD being pretty bought up all around. And we're seeing the same against EuroCAD. When we look at these charts, there's so much space for these to go down. First of all, we've got to get through this or to this red line support at about 1.45 on EuroCAD. But until we get down to about 1.4270, there's not much support either. So we've now broken down through this rising trend line, fallen down quite sharply, a bit of consolidation for a while there, and now falling down. I suppose we should get to about 1.4480 at least. It's not a very clean support area, nothing really very enticing about it, as sort of a major support, but there is very key support down here at 1.4250. So I like the look of that very much. Same thing goes for pound CAD, same sort of chart really. Just a break up through that resistance area, break up through that red line, which was resistance. Now we're back underneath that red line, so that's another over-under. Just touched that green line resistance, which is actually a stronger one going back a longer time. And if we can get it on these charts, yeah, there we go. So that's the long green line, long green resistance line. But the red one was the kind of a short-term resistance trend line. We broke up through it, over, back under, support down here. Pretty key support actually at about 1.6570. But if we can get below that sort of area there, and that might take a little bit of work, but if we can, then actually the real support down here is at around about 1.61. So, and bear in mind, we're at 1.67 now. So we've got 2, 3, 4, 5, 600 pips to go on this one before we get down. Remember that big weakness we saw in the pound in September 2022? 22. I don't know. That just shows that there's something in the system going back all that time that shows some vulnerability in the pound. When you look at the dol Qs, the unemployment lines in the UK right now, worse since 2008. Again, I don't see any reason for the pound to hold strength against the US dollar or the Canadian dollar. So I'm looking for further weakness in that. All right, that's currencies. The yen pairs overall, I'm still looking for the yen pairs to move lower. Very overbought. We're going to see some intervention from the Bank of Japan at some stage. If these all move higher than they are at the moment. I don't think they want the yen to get out of control in terms of weakness against the major currencies like it did on the last rally of the dollar yen, for example, getting up to around 150. I don't think they're going to want to see that. It took a lot of effort and a lot of intervention to bring this rate down. Some big moves, and then had to bring out some big guns from the Bank of Japan and the Ministry of Economics or Finance to make statements about potentially raising rates, which they never did. They've still got that gun in their back holster, I suppose. The threat of raising rates, negative minus 0.1 at the moment. So are they going to raise them? Are they going to talk about raising them? Are they going to intervene with massive amounts of foreign currency intervention? Perhaps selling dollars, buying yen, who knows? But I think that they don't really want us to get above here on dollar yen. I'd be very, very surprised if they allowed us to penetrate this downward sloping head and shoulders trend line, and any breach of there and hold above there. We might get a brief touch above there. Any hold above there would mean that that could release a flood of dollar buying and Japanese yen selling, which is something that they don't want to do. Their balance of trade is very much weighted in the favor of this currency moving down rather than up. So I think that's something that they're worried. They like to keep their currency in a tight band around about 120. So we're way too high at the moment at 137. All right, so that's going to affect all of these. They're beginning to move down a bit today. We're short across the board here. We're short dollar yen, we're short euro yen, we're short pound yen, Australian dollar yen we're not, and we're in Swiss franc and CAD yen. So we're short on all of these, most of these, and they've all reached key levels or thereabouts. The one that we've just taken is pound yen. I think that one's got the best chance, being the most overbought and the worst possible currency to trade at the moment, with the dol Qs stacking up as far as the horizon, worst since 2008 in the UK, GDP, worst performing country in Europe, and so on and so on and so on. I don't think the pound merits any strength. If the yen's going to strengthen against any currency, I think the pound is probably the best candidate at the moment. So, and we've also got very overbought levels, so lots of opportunity for that one to move down. All right, so that's all the yen pairs. Now let's go across and have a look at stocks. We've been in a bit of trouble here with Nvidia. We've been short Nvidia, short Microsoft, short AMD. Let me just tell you quickly the levels. We're short NASDAQ. I think that line there, above that line, that red line on NASDAQ will stop us out on this trade. That's this resistance line going back quite a long way. I think today we'll probably reach up and touch that. Whether we'll reject from there or not, I don't know. But this is kind of a dividing line between a bear market rally and a bull market, I suppose. Although we have surpassed the 20% rally marks, we're technically in a bull market on NASDAQ, literally in a bull market. So are we going to see that line tested today or tomorrow, Thursday, Friday? Probably. With OPEX tomorrow, jobs today, probably going to see that tested and probably poke through as well, which will mean we'll be stopped out of NASDAQ shorts, and we'll have to relook for reversal signs above this level. Perhaps we can get an over-under on that. And that's going to affect all of these. Seen Nvidia in pre-market is now trading at $305, $305.80. We closed at 301. So we're already $4, just about spot on $4 above where we closed. So our stop loss on this is at 303. Probably lose the Nvidia trade. We haven't got a trade on an Apple at the moment. Microsoft, we're short. We've still got some space to go on there. Hasn't moved up much, not compared to Nvidia anyway. And then AMD, we're also short quite near the top here. That also hasn't rallied the same as Nvidia has, so we've got a chance of holding there. Actually, if we're going to be shorting stocks, my favorite once again is S&P. I want to short at the top of this megaphone, somewhere up here, trumpet, megaphone, whatever you want to call it. That would take us to about what? About 42, 30, 40, about 32, 30 today, somewhere around there if we move up. 32, 30, 42, 42, 34 is the top here of this megaphone. If we can reach there today, definitely be shorting. If we break up through there, I think it'll clean the market up a lot, probably create some space for short positions. And megaphones, very, very important, powerful technical trading pattern. I trade off them whenever I see them, which isn't that often, but whenever I do, trade off them without fail. So top of this megaphone, monitor that on your own charts, put that megaphone on your charts. So that's my favorite look today. Top of that megaphone, perhaps on NASDAQ and over under once we get to 13,600, 13,700 or so. Perhaps we can get to 13,750 and then move back down. Let's watch the candle patterns on all of these. I think Nvidia, we're going to lose that trade. I do know that max pain though is at around 293. Yeah, about 293. If you have a look at the, I can't remember what the website is, go and have a look at it, max pain or maximum pain. Go and have a look at where the options expiries. Remember, OPEX Big Friday tomorrow, and that's definitely going to affect all of these markets. And for Nvidia, the point of max pain is just above 290, about 292, 293 last time I looked. So perhaps this is going to pull back quite dramatically into that level. I don't know. We might be stopped out beforehand, but we might get another chance to short it. Remember, this market's now going to open the way it currently stands at $305.80. So that's stocks. Now let's go across and have a look at this. We've got Bitcoin. We were short Bitcoin. We took profit at the bottom of this move down. I don't know what's happening with Bitcoin. I don't like these two spike lows. I don't think it's looking good for shorts. We've moved back above that support line. There's the two spike lows, two wick lows, looking pretty good. Bullish engulfing candle with a very small wick on the top yesterday and just holding above that support today. So I think Bitcoin, I have no idea. Might go up, might go down. We're in the middle. It's jiggling around. And the rejection from this 100-day moving average over the last few days doesn't look good for shorts to me. It might move down. I think if we do get lower down to about 22,500, that's the area where the 200-period moving average is. That's where you need to be aiming for. Are we going to get moving down or not? Are we going to keep moving up? Don't know. No idea. We've got this channel line that we did break down. Perhaps we can retest this channel line at about 28,200 today. So we're back inside the channel. Can we test the top of the channel and then move down? If you are going to short Bitcoin, look at 28,300, 28,200. That's where the 50 and the 20-day moving average is, and also that channel top there. So perhaps that's an opportunity to short if you're going to short, but not right now. And then let's have a look at sugar. Sugar's just moving down, two gap days in a row. I like that very much. We're short on sugar somewhere near the top there, and I'm looking for sugar to initially move down to about 24.80 per pound, somewhere around there. 24, let's call it 25. 24.80 to 25. That'll be the first stop, obviously that previous low there, and then a move back down into some of these supports, ultimately aiming for around about 22 cents per pound, which is where this Fibonacci and horizontal line is, and the 100-day moving average. So we're going to take some profit off the table here, about half, and then allow the rest to move down. That's sugar. Uranium stocks, we're long on that. I'm not going to talk about it. Go and have a look at a couple of the other previous videos. I'm talking very fast to try and keep this video short. But uranium stocks, we're long URA. That's an ETF. We're looking for this to move up to around about 23 to 24 to 25 over time, and perhaps higher after that, up into the much higher levels above us. As you can see, if we look at the longer term chart, there's plenty of space for URA, having formed a beautiful bottom along this green line, holding above it over and over again. It's looking fantastic. It's one of my favorite trades. URA, first stop 24, and then about 27, and then perhaps up to 30. So we're at about $20 now. So that's that URA ETF. All that's left to be talked about is WTI. We're long on this. Double bottom wick lows. You don't get better than that. Holding above this red line support. Fantastic. We're long on that from around about $70, somewhere around there, 70.5, I think, and looking for a retest of this channel bottom from the outside, break up through, probably a bit of faffing around for a while, but then a break up through, back inside the channel, up to this red downward trend line, up to the channel top, a bit more faffing around in the channel. Might take quite a long time. I don't know. We've got a gap there to fill. That was that gap created by, we filled it from the downside, but not from the upside. This was that OPEC gap. So perhaps we can get up into the middle of the channel, around about $78 to $79, and then eventually through the top of the channel, and then onwards and upwards. So that's WTI. And then natural gas still just holding beautifully above those support areas. Every time we get down into there, it kind of freaks people out, scares everyone. All the long hands are looking a bit worried about it, but we've tested that line now 3 times. That's today. That was yesterday. Wednesday, and that was Tuesday after breaking up through it on Monday. So holding above that support line there at around about $2.34. Let's keep things simple, folks. We've got to get up, hold above this top of this resistance line here at about $2.40 or $2.42, and then we need to get up through this wick high here, and the next stop is into this next green band, and so on and so on and so on. We've got to work our way up until we get to $3. That's where I'll be taking off at least some or all of my profits, or hedging long positions with shorts. I'm long 25% from $2.11, long 25% from $2.18, aiming for $3 to take all of it off. I don't know, hedge some of it. I don't know. We can decide when we get there. Depends a lot on how it gets there, the approach angle, the price action, anything that might be in the news, etc. Ultimate target is $3.40, 50, 60, or 75. That's this pink level here. That's where we're aiming. And now I'm completely out of breath because I've been speaking way too fast. But I've got time constraints here because I've got things to do in my little hobbit house, and my phones are going and everything's going crazy. So I'm going to finish off this video, and I'll speak to you very soon. Take care. Have a great day. And again, if you enjoy this video, please give it a thumbs up and subscribe to the channel if you're not a member. Bye.